Housing market collapses at near fastest rate in history. Is it a 1990s-style deep correction in the Toronto area and Ontario? Toronto real estate faces unprecedented decline as market conditions deteriorate rapidly. In a recent article published on December 5, 2023, by Daniel Wong of Better Dwelling, it has been reported that the Greater Toronto real estate market is undergoing a significant downturn, with home prices plummeting and market conditions rapidly loosening. The Toronto Regional Real Estate Board, TRREB, data reveals a continuous decline in home prices, erasing any gains achieved over the past year. In November alone, the TRREB benchmark price dropped by approximately $22,000, reaching $1.08 million, while the City of Toronto benchmark fell by $19,000 to $1.06 million. These figures reflect a return to 2022 levels, wiping out the brief period of gains earlier in the year. The decline in home prices is attributed to weakening demand, as investors are no longer rushing to make purchases. Home sales experienced a 6% decrease in November, reaching 4,230, marking one of the weakest recorded periods. Concurrently, inventory surged by 16%, with 10,550 new listings for sale. The influx of new sellers, more than double the pace of new buyers, has resulted in a significant loosening of market conditions. The market collapse in Greater Toronto is highlighted by the unadjusted sales to new listings ratio, SNLR, which was at just 40% in November, bordering on a buyer's market. This indicates an excess of supply for qualified buyers at current price levels, putting further downward pressure on prices. The rapid shift in the SNLR is deemed one of the fastest moves in at least a decade, signaling a collapse in market exuberance. Data from the National Bank of Canada, NBF, underscores the severity of the market breakdown, showing that the low level of sales has allowed inventory to build up, reaching the highest level since February 2019. Economist Darren King from NBF explains that the active listings to sales ratio has loosened significantly, surpassing historical averages. King's chart depicting standard deviations from the median over time indicates one of the fastest moves in at least a decade. Despite a surge in demand fueled by investors with cheap leverage in previous months, this enthusiasm has dissipated rapidly. Observers are now closely monitoring whether the gap between what investors paid and what end users can afford will narrow, or if cheap leverage will make a return. Policymakers appear to lean toward the latter, potentially compounding the existing challenges in the real estate market. Overall, the article paints a bleak picture of the Greater Toronto real estate market, emphasizing the unprecedented speed at which conditions are deteriorating. The decline in home prices, coupled with a significant increase in inventory, is indicative of a market experiencing one of the fastest collapses in recent history. The sudden disappearance of investor-driven demand raises concerns about the potential implications for both buyers and sellers, as policymakers grapple with decisions that could impact the future trajectory of the real estate market. Could Ontario's housing market experience a 90s-style downturn? In a recent article by Daniel Johnson of BNN Bloomberg, he discusses a report by Rishi Sandhi, an economist of TD Economics. Sandhi raised alarm bells about the precarious state of Ontario's housing market, describing current conditions as the loosest in over a decade. Sandhi's analysis, published on Monday, focused on Ontario's sales to new home listings ratio, revealing that it has reached its most relaxed levels since the 2008 to 2009 financial crisis. According to charts in TD's report, the sales to new listings ratio in Ontario hit approximately 37% in October. Notably, this aligns with data from digital mortgage lender Nesto, which also reported a 37% ratio for October. Sandhi expresses concern that these conditions could deteriorate further, potentially reaching levels not seen since the housing downturns of the 80s and 90s, where home prices experienced a significant 30% decline. Despite the ominous warning, the report suggests there are good reasons to believe that such a drastic outcome may be avoided. One mitigating factor is the likelihood that Ontario will steer clear of a steep recession, coupled with the prospect of a more favorable trajectory for interest rates. The Bank of Canada's decision to maintain its key policy rate at 5% for the past 2 meetings supports this expectation. TD Economics anticipates that the central bank has concluded its hiking cycle, providing a safeguard against a deeper economic downturn. The report underscores the unique challenges facing Ontario, acknowledging a housing shortage and robust population growth. While a 90s-style correction is deemed less probable, the report predicts a further decline in home prices over the coming months. Sondhi suggests that prices could drop by approximately 10% from their third-quarter levels through the first half of the next year. Elevated borrowing costs are identified as a key factor pressuring demand and straining homeowners renewing their mortgages, potentially increasing the housing supply. Sondhi anticipates this pressure will persist until at least 2025-26, when homeowners who secured mortgages at lower interest rates could face a payment shock. TD Economics report by Rishi Sondhi raises concerns about the loosest conditions in Ontario's housing market in over a decade. While the possibility of a 90s-style downturn is acknowledged, mitigating factors such as the avoidance of a steep recession and a more favorable interest rate trajectory offer some reassurance. Despite these factors, the report anticipates a further decline in home prices, citing elevated borrowing costs and ongoing pressure on homeowners until the mid-2020s. The delicate balance between market conditions, economic factors, and population dynamics leaves Ontario's housing market in a state of uncertainty with potential challenges on the horizon. What do you think? Will the Toronto area and broader Ontario housing market continue to collapse? Or will lower forecasted mortgage rates next year cause a rebound similar to last spring when prices and sales shot back up? Please join in on the conversation by leaving a comment. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.